This is Business Tonight, the top stories. Nigeria's Apex Bank okays telecom operators for payment system, a new memorandum of understanding. Oando Shares move up on Nigerian Stock Exchange as SEC lifts suspension on its trading. World Bank urges Kenya to rethink fiscal consolidation plan. And crude oil surges to two-week high as U.S. President Donald Trump pledges Syria missile attack. I am Yemisi Lanredo. The Nigerian Communications Commission has signed a memorandum of understanding with the Central Bank of Nigeria on payment system in the country. The MOU was drafted by a committee made up of representatives from the NCC and the CBN. The CBN Governor, Godwin Emefiele, disclosed it is a landmark document which will drive the payment system in Nigeria, reducing cash transaction and enhancing cashless operations in the country. But NCC believes the agreement will ensure that more people are on board the digital economy. The two organizations expressed commitment towards driving the financial inclusion in the country, as well as improvement in mobile money penetration. The Nigerian President Muhammadu Buhari has approved the extension of the Voluntary Assets and Income Declaration Scheme (VAIDS) to June the 30th. The short extension after the original March the 30th, the 31st date is based on appeals of professional bodies and individual taxpayers, but no further extension will be approved after this latest time. According to the President, quote, "For a nation of people who are competitive and driven, it is not a pride that we are the lowest performer in tax to GDP, not just in Africa, but in the world at just 6% of GDP," end quote. The President urged Nigerian companies and individuals to join in the rebuilding mission and do the right thing by taking the window of extension to regularize. VAIDS is one of the government's key policies used to reposition the Nigerian economy. The Securities and Exchange Commission, SEC, may have lifted its sixth-month share price freeze on Oando, Nigeria. The energy company is currently under independent forensic investigation ordered by the Securities Commission, with an interim report due in a few weeks' time. And just as that news filtered in, the shares of the troubled company moved up the maximum 10% to 6.99 naira within the first hour of trading on Wednesday. Well, let's talk about this. Stockbroker Charles Fakoga joins me by phone to clear the air on the lifted suspension. And also joining me via Skype is stock trader and chief executive of Kari Asset Management, Johnson Chukwu. Many thanks to you both for joining me on Business Tonight. Yes, first off, let me hear from you, Charles. What is it like at the stock market? Is it true that this technical suspension has been lifted?
Yes, I will confirm to you, based on the release that was sent to our trading machine. Yes, there was a directive from SEC as of last year for the technical suspension of Oando Shares, and the NSC complied as a good self-regulatory organization. However, on the 9th of April 2018, a directive came that the shares of Oando should the suspension should be lifted. And after testing the machine, the effective date was 11th of April, which is today, and those shares were lifted. The technical suspension was lifted, and we saw some trades of Oando. I cannot speak further because we are still awaiting clearance from the management of the Nigerian Stock Exchange. So I believe that in the coming days, the situation is going to get clearer. So as of today, there were some little trade of Oando shares, but I cannot speak further because we need to get information.
All right, Charles. All right, let me talk to you, Mr. Johnson Chukwu. Just as that suspension was lifted, we see trading in the shares moving up to about a maximum of 10%. But what does this tell us really about Oando Shares?
Well, today, if you look at the the price at which Oando Shares were, which was around 5,996 naira. And given their performance, the last reported result of Oando, which was published around November, you realize that in terms of performance, their fortunes have changed drastically. From a loss position of more than 30-something billion, they reported a 7 billion profit in the third quarter. And they're expecting that they will publish their accounts, their full year result in May. So investors are expectant that the fortunes of Oando is going to publish very good results compared to what their 2016 result was. But aside from that, I also want to mention that no trade was actually executed today. The stock opened at 5% and at some point gained 10%, but no stockbroker was able to execute any trade today because I think Securities Exchange Commission and NSE are still working on some of the formalities to allow the stock to start full trading. We all thought, because at some point the demand for Oando shares today was about 77 million shares. But there was no offer, but nobody was able to execute any trade. But given the kind of demand that we saw today, and the fact that the stock was actually, people were bidding at full 10%, it then means that the fundamentals of the stock as it stands today indicate that current price is below the intrinsic worth of the stock.
Okay, let me ask you, just yesterday we see shareholders meeting asking that the suspension be lifted, saying these activities or these issues shouldn't send wrong signals to the global market. What do you think in that case if it had not been lifted?
Well, I don't think the agitation would have led to the lifting. The basic fact of the matter is that there was an allegation of impropriety that was levied against the management of the company. SEC stepped in, appointed a forensic auditor, and then until that report, forensic auditor finished its report, the agitation by shareholders wouldn't have led to the lifting. Because that lifting, if you had lifted it without a conclusion of that forensic audit, you would have sent a wrong signal to the global investment community that you do not have the right mechanism for managing or for sanctioning abuses, assuming there was genuine abuse in the company.
All right, let me talk to you, Charles. Now, I know you're limited as to how to react to the Oando issue, but already there's trading on it. Tell us more about the trading on the Oando shares and all other tradings as for today and how the market closed.
Yeah, thank you very much. When we say an equity is on technical suspension, it does not mean that there will be no trading. Trading will take place, but there will be no price changes. So, even before the directive, we've seen trades of Oando, but the price will remain constant. So, as at yesterday, as at last week, even as at today, trade went on. So, technical suspension is not full suspension. So, trades will still take place in a handle, but the price will not change. Yeah, however, today the market closed positively. We saw the All Share Index rising to 0.86, which was very good. We saw the likes of Dangote Cement increasing by 3 naira. And of course, there were some other earnings reports that got to the market. Transcorp is paying 2 kobo, Okomo Oil is paying 3 kobo, ICO is paying 5 kobo, and of course, Data Glass is paying 1 naira 70 kobo. Also today, we also saw the restructuring of the Bauchi State government bond, amended trust bill. The bond was extended for another 5 years from 2021 to 2026, and of course the coupon rate was also increased. So there is still normal activities in the Nigerian stock market as of today. Everything went smoothly and trades went the way we've been trading in the market. So
all right.
Everything fine in the Nigerian stock market.
Thank you, Charles, for your updates on the activities there. All right, let me come back to you, Mr. Johnson Chukwu. Perhaps, I know investigations are still ongoing as to the Oando issues, but let's just preempt what could happen at the end of the day if Oando management is found guilty or the other party. What do you think would happen to the shares of Oando and the shareholders?
Well, the rules are well defined. If the management is found guilty, they could be suspended from holding position in quoted companies, assuming they are found guilty, depending on the severity of the guilt or of the offense. Two, as it relates to the stock, if management of a company is forcibly removed, in most instances, the stock will be on a bear run. People will want to dump the stock if they are not sure who will take over and manage such company, and they are not sure the new management will have the right vision, assuming you are dealing with a forceful removal by regulators. But these things are all the realms of speculation. As it stands today, the management is intact. We don't have any indictment formally from the Civil and Exchange Commission or any of the regulators as could lead to sanctioning of the management. But there are also sanctions that could be imposed on the company, and the company will be required to pay fine. But this, like I said, this is all the realms of speculation. Until SEC comes up with their report, it might be difficult for anybody to hazard a guess on what will happen.
All right, well, thank you for your insight. Chief Executive Officer, Carry Asset Management, Johnson Chukwu.
Yeah.
All right, let's see how the market closed for today. I will take a break on business tonight and come back for more. Just stay with us. You're watching Business Tonight. Telecoms giant MTN has agreed a deal with Pan-African lender Ecobank to offer mobile banking across Africa as it aims to list its Nigerian unit in an initial public offering later this year. The move comes as telecoms operators are expanding mobile services to boost margins and access new revenue streams. MTN Group Chief Executive Rob Shutter says plans for the IPO are in progress and MTN will provide exact terms in the next few months. MTN is targeting 60 million customers via mobile services over the next 3 years, up from the 23 million that's across the 14 markets where it has launched the products. Nigeria's manufacturing PMI for March 2018 currently stands at 56.7 index points, up from 56.3 points in February, which indicates expansion in the manufacturing sector for the 11th consecutive month. But a lot is still wrong in that sector that should drive the growth of the country's GDP. In this report, Winifred Ajewole examines strategies at saving the sector.
The manufacturing sector of any country helps drive its economy. It is a core driver of gross GDP and a provider of employment. Nigeria is currently facing countless challenges made worse by plunging oil prices, and there have been calls for the diversification of its economy by shifting focus on oil to agriculture and manufacturing to push economic growth. But the manufacturing sector is in crisis as its average contribution to the GDP in the last few years has not gone beyond 5%. The sector's production averaged 6.1% from 2007 until 2017. Despite the PMI decrease in January 2018 to 57.3% from 59.3% in December 2017, the Central Bank of Nigeria reports that the manufacturing sector grew for 9 consecutive months last year.
We are seeing the PMI increasing every time, every month, and every quarter is increasing. But we can still do more than what we're doing right now.
But the sector continues to face different challenges like unstable power supply, high cost of obtaining invisible funds, and high demand for imported goods, among other things. The government on its part has failed to make good policies that would help the sector.
thing we need to do is just to make sure we have more access to loan, because there is no way you can do business with your own money. It's not easy. You need to access loan. So they need to provide it in a segmental manner, that this is for this category, this for this category. Then I think BOI is doing it, but they should do more. They should go to the grassroots and empower people.
Nigerian automobile manufacturer Innocent Chukwuma of the Innocent Group, who started the country's first car manufacturing plant, says the government and banks have to do more to support local production.
The banks in Nigeria today is not interested to support manufacturers. So anybody that doing manufacturing, I hope in the bank, he cannot succeed. The bank will come and they try to crush you down. Most banks in Nigeria. Very few banks are straightforward. Most of these banks are interested to crush you down. So you can't hope on them. You have to raise money to do manufacturing. But hoping the bank to help you to raise money to do manufacturing. Today in Nigeria, it cannot work. They are not interested. They are putting their money in CBN and having enough interest rate. So they are not interested to support manufacturers anymore. Well, what we need government to do is to continue to support manufacturing the way they are supporting. They are supporting already, but they will still support more so that more people will join manufacturing. When people join manufacturing, not only politics, most people are interested to join politics. People that has money to join politics. But I'm just telling you that when more people join manufacturing, it will help even the policy, even the politics, even the economy. Nigeria, even the young ones will grow.
He also urged Nigerians to patronize locally made goods, as it would help boost the country's economy.
The view is that all Nigeria will support Made in Nigeria campaign. So when you support Made in Nigeria, you are supporting the economy, and Nigeria will become great with all the support of people. Let every Nigerian support Made in Nigeria campaign. It will help us.
Aside dwindling oil prices, which has mainly downed Nigeria's growth, this website says a bleak future could also befall the country if the dwindling manufacturing sector is not quickly salvaged. Winifred Ajoli, TVC News.
Away in Kenya, the World Bank says the country may need to rethink its fiscal consolidation plans if it aims to see economic growth rebound from a 5-year low reached in 2017. The budget deficit more than doubled to 8.9% of gross domestic product in 5 years through June 2017, and Kenya's debt is seen hitting 58% of GDP by June. The lender says Kenya's treasury plans to trim the gap to 3% by 2021 by cutting spending mainly on development projects rather than recurring expenses, which took up almost 99% of national revenue in the fiscal first half through December. Although the World Bank previously forecast Kenya's GDP will grow 5.9%, it has raised forecast for economic growth in 2020 to 6.1%. Afrexim Bank and the Export Credit Insurance Corporation have signed a $1 billion deal to expand trade between South Africa and other African countries. The implementation of the MOU will involve technical teams from the two institutions jointly identifying trade transactions and projects eligible for financing. Afrexim Bank says the joint initiative will support businesses through capacity building and market information initiatives, and also help small and medium-sized businesses join regional supply chain. China's central bank governor has fleshed out measures and disclosed a timetable to further open the financial sector, signaling fast progress in implementing the country's opening up promises. China will encourage foreign investors to enter its trust, financial leasing, auto finance, money brokerage, and consumer finance sectors, a move to take effect before the end of the year. At the Bo Forum for Asia Annual Conference in South China's Hainan province, Governor of the People's Bank of China, Yi Gang, said no foreign ownership limits will be set for new financial asset investment and wealth management companies initiated by commercial banks.
The first is the implementation of national treatment and negative list management. The second is to align the process of opening up with the reform of the exchange rate mechanism and capital account convertibility. The third is to prevent financial risk, The risk management capabilities should be compatible with the status of the opening up process. First, foreign equity restrictions on banks and financial asset management firms will be cancelled, with equal treatment for domestic and foreign funded institutions. Foreign banks will be allowed to set up branches and subsidiaries at the same time in the country. Second, foreign businesses will be allowed to own up to 51% of shares in securities, funds, futures and life insurance joint ventures, and the cap will be phased out over 3 years. Third, securities joint ventures will not be required to have at least one securities firm among its domestic shareholders.
Well, let's talk oil now. Angola has overtaken Nigeria as owner of most battered oil currency. Since crude prices crashed almost 4 years ago, oil currencies have been hammered and Angola has been seriously hit by the plunge. The Kwanza has now lost more than Nigeria's Naira, has the worst performing major oil currency in that period, excluding crisis-ridden Venezuela's Bolivar. After a series of devaluations which started in January, the Kwanza has now lost 55% of its value against the dollar since mid-2014, when Brent crude began its slide from a peak of $115 a barrel. And oil surged to a 2-week high in New York as President Donald Trump told Russia in a tweet to, quote, "Get ready for end quote for U.S. missiles to be fired at Syria." The Brent crude trades for more than $70 a barrel as trade war between China and U.S. also intensifies. Higher crude prices come amidst growing anxiety by U.S. farmers and manufacturers who now urge caution on ongoing trade disputes between the two superpowers. The OPEC basket brand trades for $65 a barrel. Well, trade tensions and Mid-East tensions affecting crude prices. That's Business Tonight. Thank you for your time. I am Yemisi Landry-Doe.